Welcome to the Weekend Bite presented by Wall Street Breakfast. I'm Leslie Osmond, and let's talk rate hike. The latest Fed meeting wrapped up this week with a consecutive 75 basis point hike, prompting a decline in stocks, continuing this volatile market. Here to shed some insights on Powell's decision and whether a relief rally is foreseeable is Seeking Alpha's Kim Kahn.
Thanks, Leslie. Yeah, there was a talk about 75 versus 100, but there wasn't a lot of talk of what everyone's calling now a hawkish 75, which is what we got. The statement, gave 75 basis points. When the press conference brought us what I've been calling painless Powell. It's a nod to anybody who's old enough to have seen MASH, the 1970 movie. And, he came out and said, we're going to keep hiking. We're going to get inflation down to 2%. We're going to get convincing data of that. And, we wish it wasn't going to be painless, but that's not the way it's going to happen.
Kim, do you think that the markets have appropriately priced in the Fed's hike, or are they coming up short, especially given the latest dot plot adjustment?
Okay, so looking at the stock market, I do not think they have priced it in yet. I don't really even think they've kind of started to price it in yet. If you looked at the action yesterday after the statement and then during the press conference and then the final half-hour trading, I was covering the market story and it's changed my headline like 5 times because the market was bouncing around. What you saw more was a battle of the S&P over the 3,800 level than you really saw any kind of reaction to like, this is really dovish or this is really hawkish. So I think that the stock market still has a ways to go in pricing in, what's coming from the Fed. And I think that they're right to, because next week you're going to have a lot of Fed speakers. And you mentioned the dot plot. Yeah, it was much higher than expected at 4.4% for the end of 2022. But it was evenly split almost. You move one of those dots away and it gets down to 4.1%. And then we're talking 50 basis points in November instead of 75. So I guess they're going to wait and see for that. Bond market, though, certainly is making its moves today. And, the 10-year prices are just getting decimated and yields are surging. So they have definitely made their decision that they believe that Powell is going to be as hawkish for a long time.
A lot of volatile swings still happening. Thanks, Kim. Looking forward to having you join us again after our next guest. With energy as the top performing sector, up nearly 40% year to date, and renewable energy is top of mind. Our next guest joining us today is Zach Stein, co-founder of Carbon Collective, who's helping you invest in renewables to help solve climate change. Thanks for joining us today, Zach.
Thanks so much for having me.
Zach, you're coming to us with exciting news, including the launch of your new Carbon Collective Climate Solutions U.S. Equity ETF. The ticker symbol is CCSO. Tell us about your mission and your new ETF.
So Carbon Collective is an investment advisor that helps individuals, families, and businesses align their investments with what the science tells us has to happen to solve climate change. We need to stop investing in new fossil fuel expansion and dramatically increase investments into climate solutions. Up until now, there was no simple way for investors to invest in the hundreds of companies that are building solutions to climate change. Renewable energy, like you said, but also the electrification and energy efficiency of our buildings, electric cars, batteries, sustainable food, and far more. So that's what we put into this ETF, and we're really pleased in its launch.
So with the Russia-Ukraine crisis persisting, and while fossil fuels are still widely used around the globe, Europe's been a big proponent of renewables, but we're seeing a shift back into what I would consider the dirtier fossil fuels like coal in the Eurozone out of pure necessity. Do you think that renewables can help solve Europe's energy crisis, or do you think that there'll ever be a point where we'll no longer need the dirtier fossil fuels?
Absolutely. That point is coming. Renewables are fundamentally and economically better technology than fossil fuels. In 2010, 2% of our world's electricity was produced with renewables. That is now over 10%. We're in the middle, we're at the beginning stages of that S-curve of adoption because solar power, wind power, and batteries are the cheapest form of generating electricity in most places in the world. We're seeing supply chains ramp up and go after that. So it is only a matter of time, especially as we see the electrification of our economy, moving from gas-powered transportation to electric-powered, gas-powered heating to electric-powered. And we're going to need a lot of that renewables. So what the electricity landscape looks like today versus in 10 years is going to be dramatically different.
Zach, there are a lot of naysayers when it comes to renewables. Why has ESG had such a hard time gaining traction across industries?
So ESG it gets so conflated with a lot of other terms and things like that. When it comes specifically to solving climate change, the science of what we have to do is clear. And what's very nice is that it's not altruism in that. Again, when we look at things like renewables, it's simply better economics. Same thing with going to electric cars. And I think a lot of the problem with ESG is it's really opaque and hard to understand. It was something built by institutional investors for institutional investors to measure ethical risk. And your everyday investor who goes in to see that portfolio doesn't really get what's in there and why. And that's why we need things that are a lot clearer, like saying, here are the companies that are solving climate change. And that's why we're excited to launch this ETF.
So from a pure investment standpoint, how do you get the people to invest not just for the cause, but to make money? Are there variables that lead to better risk-adjusted returns over the long term? And if so, what are they?
The only thing we talk about with our clients is long-term performance. I'm 33. The way I think about my retirement fund versus what I'm thinking about in the next 6 to 12 months are going to be really different styles of investing. It's that long term that we're looking at. And when we look at oil and gas, we don't see where there's going to be room for capital appreciation. Yes, it has had a good 18 months, but still, if you had divested from the S&P 500 from the year I was born, 1989, until the present, you would have made more money. And with the headwinds that the industry is facing in the long term, being outcompeted in transportation by electric vehicles, being outcompeted in electricity by renewable wind and batteries, where this industry is going to grow is really unclear. So we tell our clients, let's not just focus on the now. Sure, there are profits to be made within that. But if you're looking at the long term, this is actually the best time to sell and divest, sell high, and get out of an industry that's fundamentally in decline.
With the recent passage of the Inflation Protection Act, how do you foresee it impacting renewable investments?
It's absolutely dynamic for renewable investments. These industries, they don't need the help from purely an economic perspective, but from a climate perspective, we need these to scale as quickly as possible. And the great thing, again, is that this is not altruism. These are industries that have the economics driving behind them. Setting up a solar farm is a great investment. And especially when you add battery backups to it. So seeing the passage of something as momentous as the Inflation Reduction Act gives especially folks like me in the climate space a lot of hope in this space.
You talked about institutions and various investors investing in renewables. What are your thoughts of the greenwashing phenomenon? And for those that don't know what that is, the rubber stamping basically green on investments that really aren't green.
This is part of why we started Carbon Collective. If there wasn't greenwashing, we wouldn't have to exist. But investors saw with the rise of ESG that by being able to put quantitative data to ethical risk for the first time, there was all of these other ways that they could spin it. And one of those was like, here is a more sustainable portfolio. But again, it was very confusing for people with that. So that's why we need clear threads. And to base it in the science of what is the number one problem within sustainability and sustainable investing, it's climate change. And fortunately for us, the science is very clear on what investing needs to do to solve that. That's why we started, and that's why we align portfolios with that vision of what needs to happen.
Zach, you've been great. Thanks for joining us today. Zach Stein, co-founder of the Carbon Collective. Check out his new ETF, ticker symbol CCSO.
Thanks so much for having me.
Joining us again is Kim Kahn to close us out with next week's Catalyst Watch. Take it away, Kim.
Thanks. I think we should move away from macro. Everybody's had enough of that for a little bit. And, who can follow up on Jay Powell? Well, Elon Musk, definitely. So you got kind of the week bookended. At the start of the week, there's Elon Musk is going to be deposed in the trial over the Twitter acquisition. And of course, that's going to be behind closed doors. It's going to be 2 days of questioning. But, it's not unheard of for, leaks to come out of depositions. So people will be watching closely for that. And then at the end of the week, it's Twitter's AI Day. It's its event day where it usually comes up with new products and new ideas. And the big one, the buzz about it is Optimus, its humanoid robot. Elon Musk tweeted earlier that there may be a working prototype for the AI Day that would be pretty exciting for some people. It actually kind of scares the bejesus out of me because, from Blade Runner to Ex Machina, if movies taught us anything, humanoid robots do not work out well, but we'll see on that.
It'll definitely be interesting to check out. That wraps it up for this week. Thanks. Have a great weekend.